It's a new day to do business. 55 minutes of business, current and relevant business talks. That's what we do on Business Morning. Good morning, everyone. Welcome to the program. I'm Ini John Mekwa. We start as usual from the global space, where oil prices edged low on Wednesday after rising to two-week highs in the previous session, weighed down by investors waiting for clarity on the new U.S. tariffs and expectations of rising crude inventories in the United States. So we see, looking at the numbers, Brent futures slipped 0.2%, $70. That's the price for this morning. WTI also went down 0.2% at $68.17 a barrel. U.S. President Donald Trump's latest tariff delay provided some hope to major trade partners that include Japan, South Korea, and European Union that deals to ease duties could still be reached, while bewildering some smaller exporters such as South Africa and leaving companies with no clarity on the path forward. Trump pushed Wednesday's previous deadline to August 1, a date he said was final, declaring no extensions will be granted. He also says that he would impose a 50% tariff on imported copper and soon introduce long-threatened levies on semiconductors and pharmaceuticals, broadening a trade war that has rattled markets worldwide. And there's concern that the tariffs could curb demand for oil. And while there's strong travel demand during the U.S. July 4 holiday weekend, data from industry sources shows possible crude inventory builds in the U.S. of around 7.1 million barrels, though fuel product stocks were lower. OPEC Plus oil producers are set for another big output. We've been telling you about that. From August, it's going to be 548,000 instead of 411. And then still around the oil sector, the Dangote petroleum refinery has reduced the price of petrol from, that's the ex-depot price, from 840 naira to 820 naira for a litre. The 20 naira reduction comes 1 week after refinery dropped the price of a fuel from 880 to 840. This indicates a 16 naira, that's a 6.82% cut in petrol prices by Dangote refinery within a week. A spokesperson of the group, Mr. Anthony Chejina, says that the company reduced the price to make products more affordable for Nigerians. Meanwhile, there are reports that Dangote Industries Limited expects its 650,000 barrels per day refinery, as the largest single line in Africa, to rely entirely on Nigerian crude oil by the end of this year, 2025, potentially displacing hundreds of thousands of barrels of imported crude daily. According to Bloomberg, the refinery received about half of its crude in June from local producers who will be able to sell more to the facility as their foreign supply obligations end. We leave the oil and gas for a bit now. Global trade expanded by an estimated $300 billion in the first half of 2025, driven by rising services trade and marginal increases in goods prices. This is according to the latest global trade updates released by the United Nations Conference on Trade and Development, UNCTAD. The UN agency estimates that global trade rose by 1.5% in the first quarter of 2025 and is projected to grow by approximately 2% in the second quarter. However, UNCTAD warns that the outlook for the remaining parts of the year is increasingly uncertain due to mounting policy risks and escalating geopolitical tensions. Economic activities in Nigeria expanded for the 6th consecutive month in June as the country's Composite Purchasing Managers Index, that's the PMI, went up 52.3 last month. This is according to a report released by the Central Bank. All three major sectors, agriculture, industry, and services, recorded the highest expansion in economic activity during the review period, largely because of increased production and farming activity. However, the CBN's June PMI report suggests that while economic activity continues to grow, the widening gap between input and output prices, especially in key sectors like agriculture, could lead to price adjustments by firms if cost absorption becomes unsustainable. Now let's look at the power sector. Power distribution companies, DISCOs, generated 199.85 billion naira in revenue in April, and this, according to the Nigerian Electricity Regulatory Commission, is the latest figure. In its DISCO's commercial performance fact sheet for the month under review, the NERC announced that revenue evaluation says that the figure represents a 5.81% increase from 188.89 billion naira revenue collected in March. The power sector regulator says that April revenue reflects a collection efficiency of 77.59%, and that's up from 71.07% in March, while the total energy received by DISCOs was 9.16% lower than the previous month of 2,622.46 gigawatts in April. And we're going to stay on that for a bit, talking about the electricity sector. The Nigerian Electricity Regulatory Commission, that's the NERC, has said that electricity distribution companies installed a total of 187,194 meters in the first quarter of 2025. According to the report, the figure marks a marginal increase of 0.41% compared to 186,431 meters installed in the fourth quarter of 2024. But there are still complaints of metering, lack of it, in many parts of the country. Especially at this time, there are stories of expired meters without avenue for replacement. That, unfortunately, is a story that is making the round at this time. And so let's have this conversation with Engineer Agoro. Joins us virtually from Lagos. Good morning, Engineer. Thank you for joining the program.
Good morning.
So we hear revenue has increased for DISCOs, and we want to connect that to meters. And we know that the federal government has upped its efforts to spread meters around the country, and yet it does seem like we still have a lot of complaints about access to meters in most parts of the country. You are a meter manufacturer based in Lagos. What's the situation from your perspective?
Yeah, thank you. From my perspective, meter as a manufacturer, we have over 38 members manufacturer in Nigeria, local manufacturer in Nigeria today. The challenge is not in the production of meters. And up to now, we have a meter asset program from the Nigerian Electricity Regulatory Commission. I can tell you this is the only thing that the manufacturers are doing at the moment, because the other good initiative of the federal government, they are having one kind of bottleneck or the other. As you are aware, 1.2 million meter was awarded over a year ago. Up to today, according to the record from the ministry, it's about 70-something that has been delivered. They have over 200,000 that is still lying down in the pot. And you see that the new initiative by the federal government, again, of about 1.6 million has not been concluded. We have another one of about 250,000 that was supposed to be for the local manufacturer too. It has not yet been concluded at the moment. So all these initiatives that customers are waiting for free meter, so that makes them to even try to reduce their acceptance of the meter access program. I can tell you through the effort of Nigerian Regulatory Commission, they make the MAP program very easy, and a lot of people, capital investments have been brought into this. So there is meter. I can tell you everywhere there is meter, but the availability by the customer, because they are waiting for the free meter, that is what is delaying the progress on the MAP process.
I beg to differ, because I know some individuals firsthand who are ready to pay for this meter. They are not waiting for free meters, and they are under Ikeja Disco. So when you talk about people waiting for free meter, I beg to differ with that observation because I have had interaction with individuals who are not waiting for the free meter. And I also want you to help me understand where meters are expired. So people have old meters, they can no longer use it. They say it's expired. Could you explain to us what's going on there?
No, the issue, there has been a long of time, more than a year ago now, we've been talking about the token. Is that it's like there are some meters that are old meters that are not the STS2 compliance. So there's a rollover because we know we are using STS in Nigeria today. Most of the meters must be STS compliant. Based on by November this year, some of those meters will need to be either be upgraded. As long as they are standard meter, they are GLMS protocol meter, the only thing that needs to be done is just to run a token on the meter. Unless the meter that the customer has, they are not STS compliance meter, that is when they have to be changed. And that is the responsibility of the DISCO. It's the DISCOs that has to change the meter. It's not, according to Nigeria Regulatory Commission, it's not the customer that should pay for this meter.
Yeah, but since we're in Nigeria, there are customers who are ready to pay, and they are told that there's no meter. Now, you are a meter manufacturer, and you said that there are meters. So where is the missing link in all of this?
Now, the truth of the issue is that this is open for public to see. There are meters. Yeah, I know if you count the manufacturer in Nigeria today, by the time you can visit their stock, I can tell you confidently, in our own factory now, we have a stock of over 40,000 meters there. And we are a map in most of the discos around, we are a map in Ibadan, in Abuja, and in Benin. So I cannot speak for Eco Disco, but I know we have a lot of people for Ikeja Disco, but I know we have a lot of map that I know, like a map like MBH, a map like Bujek. I know they have stocks of meter. So when somebody says there is no meter, I beg to disagree with that. There are meters.
Okay, so since these individuals say they went to Ikeja Disco and they were told that there are no meters available, what could be happening? Can these individuals come to you as MAP directly to get it? Because a lot of people do not know that there's a MAP, there's, an in-between agent between the consumer and the discos. All they know is to go to the discos and, apply for meters.
The truth of the issue is that Nigeria Electricity Regulatory Commission make this thing very transparent and very open. Every month, all the map bid for meter on a competitive nature, and discos are made to publish those bidding every month. As of today, we have a bid that is concurrent until August of first week in August. So I know under Ikeja, maybe the customer just need to visit their website. You will find a list of maps that are operating in Ikeja at the moment, and based on that, the customer will be able to see the prices, because the Nigerian legislature make sure that all the map disco publish the prices for some of these meters. So that's why I'm 100% certain that there are meters, because if you don't have a stock of meter, you will never be allowed to bid or talk less of publishing the prices.
All right. Well, I guess, for our viewers, if you're affected, meter asset provider here is saying, please go back to the website and check for the maps that are available and that there are meters. And so Ikeja Disco should not tell their customers that there are no meters and they have to be stranded and waiting because they say they have a meter that's expired. But let's broaden that conversation now, Engineer Goro. We know that the federal government also has a program that is supposed to drive the spread of meters. How does that work? Who can be a part of it? How is it going at this time?
Well, the truth is that the federal government program is a very laudable program. But the challenge we have now in the country is that we are trying to put a new wine in an old wine skin. The major challenge to that deployment, because we recently have a program called MAF that we are supposed to debug, you find out that the data is a major problem in the NESI. Government needs to invest in a clean data. Data for the NESI cannot be left alone for the DISCO, because this is the cash cow of the entire NESI. So now, with the latest electricity acts, with the new set of states now being given ability to be able to manage that, every state should do whatever they have to do to have a data of the particular electricity user in their state. With that, that is when any federal government initiative on meter deployment can be effective. As of today, nobody can effectively say that, oh, these are the real number, these are the authentic data in our DISCO, and this is the people that have been metered, and immediately the people are metered, they can be upgraded immediately. Technology can help to solve this problem. You know, unless this is solved, there's no initiative that the government is doing that we can do an effective metering in Nigeria today. So that is what is actually preventing. Government has a lot of plans. PMI today, they have over 700 billion naira that has been allocated for meters. There are loans for the first phase of the World Bank, the second phase of the local, but all this initiative can never be achieved without an effective data. So government needs to invest and help the DISCO to be able to solve this problem of data. Because what we are hearing is that government has spent money before on enumeration, but those are in the hold. Now, those enumerations are not, people need to know the actual data that we have of the customers, and government needs to have this data in their fingertip, not what the DISCOs are telling them.
So you think that the NERC should delve into this issue of gathering data so at least we can have a foundation for the planning and the policies that the federal government is sharing with stakeholders?
Yes, the challenge the NLC has before is that because most DISCOs have said that they have invested money on the enumeration. So now it's difficult now for anybody to be saying now that we don't have the data. But the truth that everybody knows in the NESI is that those data are not authentic. It is necessary that the government has to take this initiative and make sure that enumeration of from each state. If today, if you ask that, how many number of customers do we have in your state, for instance? How many of them are meter? But it is all on guesswork. Because when you use that data to do a meter rollout program, you are going to have a problem. So it's good that the government, for the effectiveness of their program and their plan, they need to invest in technology to be able to help in gathering this data, so that they will use that to do the meter deployment. Of the truth, government has highlighted a lot of money for meter deployment, but this cannot be achieved if the data is not clean.
Engineer Gore, what about states? Because we know that, there's a new law that empowers states to do more in the area of electricity. Can't we also bring the subnationals in gathering this data, for instance, and making metering more effective?
Yes, when you look at the NESI, the only unfortunate thing is that unfortunately, is the DISCOs that collect money for the NESI. And this is the most important part of NESI. So any state that want to make progress must have a data of it's a thing that the states can do. Because this data should not be only the responsibility of the DISCO. Because this is a thing that is affecting the entire NESI. So any state that really wants to have information on their electricity, on the load demand in their area, must have data. So the first thing they must do, where they can work upon, is to build effective data of the customer, of the energy demand, and everything in their state. So states can do this. I think it's a responsibility that the state can really key into. Any state that have this data, the rest is not a problem again. Then when people have the data, the initiative of the government can be effectively utilized. Then the private people can come into and be able to close the metering gap.
All right, Engineer Gore, thank you so much. Managing Director of Protege Global Services Limited. Engineer Ademola Ogoro. Thank you for your time and perspective this morning.
Thank you for having me.
All right, we're still staying with energy, electricity. I wonder if you saw the news a couple of days ago, how gas flaring has hit a 4-year high and Nigeria is losing billions of naira from that. We'll have that conversation and how that can be connected to the electricity that we all look for in this country. It's still here on Business Morning, but that's after the break. Please stay with us. Welcome back. It's still Business Morning here on Channels Television, and we're discussing electricity now. A recent report shows that gas flaring in Nigeria hit a 4-year high as factories starve for energy. On the other hand, despite federal government's efforts to curb the menace of gas flaring, Nigeria lost 15,400 gigawatts per hour of power generation potential in 5 months between January and May this year. And yet, we are looking for electricity. What a contradiction there. But let's try to see if there's something that can or should have been done about this with the Managing Director and Chief Executive Officer of Enerplus Energy Solutions Limited. Yusuf Abubakar joins us from our Abuja studio. Hi, Yusuf. Good morning and welcome to the program.
Good morning, Ini. Thank you for having me again.
Yeah, so we've been talking about gas flaring, and in spite of all of this, Nigeria, just this year, January to May, is set to have lost 15,400 gigawatts. And yet, when you talk to manufacturers, electricity is still a major problem, a deterrent to manufacturing and production. I wonder what we're missing in all of this. We have the potentials, turning it into what we need seems to be another kettle of fish.
Yeah, thank you, Ini. With the gas flaring at the moment, with Nigeria at the moment, we have over 300 million scoff per day of gas waste. And if you look at it, these are opportunities we could key in our value chain to make sure our energy generation is upskilled and also have alternative energy mix, which is part of the policy the present administration has been pushing as well. So presently, we have 200 trillion natural proven gas at the moment in Nigeria, 200 trillion. And if we now work towards the value chain within the gas, there are certain areas we need to scale on. So from our gas network to, the processing to the generation. So those are value chain we need to work on. Now, I would also give credit to administration, past administration and present administration that's been working on, the Escravos Lagos network, the AKK network, and the EB3 network as well. But there's more to be achieved within this space. So looking at how we can, the other speaker was also talking about having data centers where we can have gas meters. So I would briefly talk about how we can also enhance our database, which can help improve our gas structure. And this is also a numbers game. It involves a lot of investments. It involves a lot of stakeholder, government, private sector, and the entire Nigerian masses to come so we can have a synchronized system that we know how much gas we can distribute for energy, and also converting those gas into CNG, LPG, and also generation. But we've gone back and forth in terms of generation, distribution, and I feel there comes a time where we need to look at the decentralized energy within the gas sphere. Nigeria is blessed with gas. I see no reason why we shouldn't have more interest in this gas for us to meet at least our energy demand, even within states. Now, most states have resources and network where we can leverage on for our gas. And with the policy, the 2023 policy, where states has the autonomy to generate gas, we can also work with government institution like Niger Delta Power Holding Company, which I see that they are very effective when it comes to power plants, turbines, and they can work with states. Now, these are areas where we can also bring in the private sector. So we have...
Go ahead. Go ahead. I can hear you. Please go ahead.
All right. So we have enormous natural resources that we can explore within our gas, which is untapped at the moment. I mean, let's just also just focus on industrial clusters where we can focus on agricultural production, urea. The value chain is so vast that I feel we've not really sat down within the private sector. And there are a couple of people doing it, but we need more hands. We need more FDIs to come in, you know, to also stabilize the market. We need tax waivers for infrastructure to come in. We cannot say we want to develop an industry where we can import machineries that could make this industry very viable and accessible for the general masses. So these are the points that I've seen so far, and based on the vast, if you look at crude gas is a byproduct of crude, and looking at that value chain, there's a lot that we can explore within that value chain, whether it's agriculture, whether it's energy, manufacturing, production. We need all that. We want to focus on exporting products. We need our gas to be very viable. We need to stop the flaring. We flare 300 million per day. This is something that could be cut down, you know. So I feel moving on, there are a lot of value chain within the gas sector, from smart meters to industrialization within that sector, to agricultural endorsements for energy, for manufacturing, and for production. So I think it's very important we explore, and also it also helps with the environment. Flaring is bad to the environment. It doesn't help us, and we have this waste that is going consistently in most of the refineries around the country. So I think with the pre-existing network that we have at the moment in terms of the gas lines across the country, we can leverage on that in building small clusters of industries, small clusters of estates that would have energy. And, you know, with that, I see the sky just being the beginning of how Nigeria can be industrially viable.
All right, so Yusuf, I mean, and I'm glad you mentioned some incentives that could drive more private sector players to the scene. But I'm wondering, why does it seem so difficult? A lot of people have said Nigeria should even be called a gas-rich country more than, you know, an oil-rich country. But we seem to be missing out on that. We've seen crude being used, crude being explored, and then we see this waste that's been going on for years. And we can have electricity. It's a form of business. If the private sector would get engaged, and as you said, maybe build a cluster around there, the electricity we so look for in this country, desperately look for, would be solved. So why do you think it seems so difficult to turn these ideas and these talks to actual reality?
I don't think it's difficult at all. I think we need better ways of doing things in Nigeria, access to not just finances, but also access to the structure that would make this gas more effective for people to use, like the commercialization of the gas, which I feel like it's also um, one of the key areas for you to drive foreign investors. Around the world, gas is a very high commodity on demand. So if you also look at how we can, focus on key areas, basically, key areas like um, enforcing the flaring of commercialization of the gas is very important. If we can enforce this flaring that's wasting, that's also degrading the environment, it's one area that we can look into, that investors from all around the world can come in and say, okay, you know what, Nigeria, these policies are there. Also the ease of doing business in Nigeria, making sure that when investors come in, it's easy for them to be onboarded. It's easy for them to have access to certain areas in the gas sector, which I think not just, even local manufacturers, research and development. How can we partner with universities, across Nigeria to also develop within their own local content of gas? So I feel these are policies that we can really focus on, and these are issues we can look within our scope as Nigerians, as people who want to make sure that we are looking at exporting our product, we are looking at industrialization. So policies are very important, as much as enforcing those policies are very important, as much as communicating that these policies are available. This is how you can get to access this policy. Most times I think communication is one of the biggest problem we have, when it comes to access to certain resources within the government space. Also give the private sector free hands, give new companies free hands. Tax waivers are very important. Give us tax waivers between 5 to 10 years. Let's between 5 to 10 years, that's half a decade to a decade. Let the industry mature to a point whereby there's investors' confidence to say, okay, you know what, Nigerian gas sector is actually moving towards great, for lack of better word, skill. So I feel, we need more engagement between the private and the public sector, which is the government. We need more communication. We need to see how we can allow small businesses to also come in within that space and explore those spaces and see what we can do. From industrial, from agricultural, these are areas we have AKK pipeline already. The Escravos, Lagos also. These are networks that can be connected through either decentralized system of micro and mini grids in that gas sector. We need processing plants where we can separate hydrogen sulfides, water from the byproduct of the crude, to get our gas. And these are value chain that investors would like to see, to say, okay, you know what, we feel comfortable. You don't have to do the whole gas. You could just get the value chain focus, and then the next guy gets the other value chain. And we need to be more collaborative. Collaboration is very, very, very important when it comes to industrialization, whether you're doing it in private, whether you're doing it in the public sector. I think that is one thing we should look at. Being Nigeria is one of the biggest oil producing nation around the world. At least we are ranked amongst the top 10. And we have over 200 trillion proven gas reserve at the moment. These are areas we can actually explore and make sure that we achieve, at least, even if we can look towards between now and 2030, 30,000 megawatts.
So Yusuf, when you paint this picture, of the value chain, of course we also have the states there who can do something. How do you think this process can be, let's just kick-start it. Could the states perhaps jump in and make something happen, even if it's from a smaller scale, and get more private sector investors interested?
Yeah, I think the state, if we look at the 2023 bill that was passed, where state has autonomy to generate its own power, the state could create its own IP with also the federal government collaboration. I also mentioned Niger's Delta Power Holding Company, which is one of those they could work with, and a lot of other parastatals that I probably would not have in my head right now. And power is demand and supply. Many states already have pre-existing net gas pipeline network moving around that state. Bring private sector engagement, talk to companies that have FDI access to come in, do collaboration within the states, allow private sector to run this. States monitor as regulatory body and also as an investor. I feel within even looking at just the value chain of agriculture, bringing in, looking at urea, I think it's not just even gas as a manufacturing, it's making Nigeria a powerhouse where a state can now be exporting from its own domain. So imagine states like Katsina, Niger, and other states who may even have dry ports. These are ways to generate IGI within your state. Also, power security, because we've said this time without number. Power security is national security. If we really want to move forward, we need to look for new ways of doing things. We need to also explore pre-existing infrastructure and resources we have just lying idle that are not working. Let's get engagement within the states. There are investors that are willing, if the state can also grant those investors sovereign guarantee through the Ministry of Finance. These are things that would actually drive investment, for lack of a better word, confidence for any investor outside of Nigeria to say, okay, we're bringing this much money to come and invest in energy. It will create employment, it will create security, and it will create development and growth. So the policies are already there. We just need to be very deliberate. We need team and experts that can come in. We need stakeholder engagement. And to be honest, there are infrastructures that are lying idle that we can reenact back. That has not done well in years. So I feel there are states that are deliberately actually generating their own energy. Take Lagos State, for instance. They generate their own energy. So I see no reason why other states can't do that. At the end of the day, it's the supply demand. There's also the value chain within the energy space. So the generator, the process. So there's a lot of value chain within that space that we may not be able to talk all online today. But if you look at what we have on gas, and I think gas can actually solve at least one of the energy crisis we've been facing if we have the mix, and also it helps with the turbines as well. We need gas to run most of our turbines. So we need these things to work. Yeah, and they have to work in a collaborative manner. So and I think if the states are willing and saying, we're ready, I am very sure we would have investors that would troop in sincerely to make this happen.
So Yusuf, when you see a story such as this, we see that oil and gas companies in Nigeria, including Nigerian Petroleum Development Company Shell, Chevron, paid 602.22 billion naira penalty for gas flaring. I'm thinking, is there a way we can turn this penalty into incentive, into funding, of actually using this gas flaring for electricity?
So we have the NGFCP, which is enforced gas flaring for generation. So if we can enforce the glass flaring program, which has been enacted, I feel these companies you just mentioned too are pretty much interested in energy. I'm very much sure about that, right? And which brings me back to a point whereby we need to be very deliberate and be very concise in what we are trying to achieve. We're trying to achieve power generation, stability in power, infrastructure. We should also look at vandalism within the space as well, because flaring also comes from vandalism, not necessarily from these companies as well. However, it does also, majority of the flare comes from the company. Um, these are issues we in the private sector and the public sector needs to really sit down, and communication is one of those key things where penalties should be given when there's vandalism to equipment worth millions of naira or dollars, so that people understand that these are national assets and it's a crime for such things to happen. And I think when it comes to also investors coming in, they also understand that we need energy for any industrialization to happen seamlessly in Nigeria. So I feel when it comes to flaring, we need to enforce more on the flaring, not just even to tell this company, say, okay, maybe your corporate social responsibility, instead of paying that, make 10,000 megawatts in the area, create an industrial cluster where you just make 10,000 megawatts and focus. So if we have these companies just focus on making those, I think we would go a long way in terms of integrating all the grids and also doing a rebate system whereby when grid collapse, you can easily send better consistent, like backup energies as well. So policies are very important, but enforcement of those policies to also sustain growth and sustainability is very important. And I think that is what we should be looking at. And the Nigerian interests for energy should come first over any other thing. Because without energy, we cannot go anywhere. We cannot boast on manufacturing. We cannot boast on technology advancement. We cannot boast on agriculture. We cannot even feed ourselves. We cannot boast on, cold room to freeze our products because things are going to spoil. So there are a lot of areas that we need to look at. And when we're talking to these companies, these shell companies that are really big, and say, okay, you know what? If you're coming, this is what we want you to do as part of, give them also tax waivers to achieve these things. And I think we'll go a long way. And the small, medium companies that are coming, like us.
All right, Yusuf, thank you so much for that suggestion. We do hope someone is listening and maybe move it forward and instead of just making them pay the cash, can they, find a way to turn that to electricity, which they can also use. I'm sure that could be an incentive, to discourage flaring. Thank you so much, Managing Director, Chief Executive Officer of Enerplus Energy Solutions Limited, Mr. Yusuf Abubakar, for your time.
Thank you very much, Annie.
All right, now let's head to the global space now and find out what Will has for us. Hi, Will.
Hi, Annie. Good morning.
Good morning.
Oh, yes. As usual, we have Trump flaring up again. So,
want to stop the flaring of our gas.
Oh, well, you can't stop Donald Trump from flaring up.
Okay.
Yesterday, he went flaring up, and we saw what happened. But he did say that he's not going back on the deadline this time around. He's sticking to it. But we'll just wait and see when August the 1st comes around and see how he manages that. But President Donald Trump says a 50% tariff on copper imports is coming. Now, with even higher duties planned for pharma products. Now, copper prices hit a record high in the U.S. after this news. Prices surged 13%, boosting Freeport McMoran stock by 5%. Commerce Secretary Howard Lutnick says the move aims to bring copper production home, with the order expected to be signed by the end of July. However, copper prices outside the U.S. dropped, with London Metal Exchange prices falling as much as 2.4% at open, later trading at 1.4% lower at $9,653 per ton. Trump also plans to ramp up 200% tariffs on pharmaceutical imports. I mentioned earlier, giving firms up to 18 months to relocate production. But to discuss this and the implications of this on the U.S. market, on the U.S. health sector, and, healthcare in general, we have Maria Bird, our correspondent in Washington, joining us to discuss this. Maria, good morning. It's good to have you on the show. Okay, so while we wait for Maria, I think we have a bit of a delay there. Well, let's just look at what other markets are doing right now. In China, we see China's producer prices dropping 3.6% in June, the sharpest fall in nearly 2 years now, as price wars and weak demand weigh on the economy. PPI has been in deflation since 2022. Consumer prices, we see it rose 0.1%. Core CPI climbed 0.7%, the biggest rise in over a year. Policymakers are warning that price cutting among firms is hurting profits, with industrial earnings down 9.1% in May. Now, Xi Jinping's government is now pushing for quality over price competition. Exports remain a bright spot, though, but analysts say without strong stimulus, deflation will persist in the country. Starbucks China business has received offers from firms including Carlyle, KKR, Centrium, and Hillhouse, with a potential valuation of up to $10 billion, according to reports. Now, the coffee giant may retain its 30% stake, with the remainder split among multiple investors. Starbucks is not pursuing a full exit, but is reviewing nearly 30 bids received since May. The deal could take months to finalize, with shortlisting expected by September. Now, still staying in Asia, in Vietnam, Vina Capital says foreign investors are expected to return to Vietnam's stock market after the country secured a lower-than-expected U.S. tariff. CEO Tu Nguyen says that Trump's trade deal and a possible FTSE Russell upgrade could boost investor confidence. Now, Malaysia's central bank has lowered its key interest rate by 25 basis points to 2.75%, its first cut since 2020, following President Donald Trump's hike on Malaysian exports. Bank Negara's move surprised some economists, though, signaling a preemptive response to trade headwinds. Now we see Apple CEO saying longtime COO Jeff Williams will retire later this year after 27 years at the company. Operations head Sabi Khan will assume much of the role, while Williams temporarily will remain in charge of design, Apple Watch, and health initiatives. The move comes as Apple faces growing supply chain pressure amid U.S. tariffs. And now let's take one story before we go to Maria. Turkey has raised taxes on lira deposits and mutual funds to shore up revenue among a growing budget deficit. The tax on short-term deposits now stand at 17.5%, while mutual fund earnings face the same rate, according to a presidential decree. Now let's just jump back to a conversation with Maria. We're looking at the impact of the 200% possible tariff on pharmaceuticals and how this will impact the health sector in the U.S. and possibly outside the U.S. Maria, it's good to have you on the program.
Thank you.
Maria, we're looking at 200% on imports right now. That's what Trump is threatening. Looking at the situation in the U.S. with Medicaid, the policies to cut this, could this possible 200% tariff on pharmaceuticals drive drug prices higher, sharply higher, especially for generics, the everyday drugs used by most Americans?
Yes, now this has been a major concern. The president was very clear, even during the campaign, that he was going to address pharmaceutical development research and biotech. And so this is something that he's promised since before he even came into office. And so we knew that there was going to be a day when he was going to be calling on pharmaceutical companies to either develop here in the U.S. or experience steep tariffs. 200%, I'm not sure people were expecting that, but this was something that has been in the works for quite some time. As we heard at the cabinet meeting just the other day, the president said this is not going to go into immediate effect. It will be about a year and a half. But biotech companies have been preparing. We have seen many biotech companies begin to try to bring things back on shore to the United States or those companies that are overseas putting plants and building plants here in the United States. Actually, the Maryland region, which is right outside of Washington, has become a large industry for this area, the biotech industry. And so there's a growing biotech industry where many of these pharmaceutical drugs could potentially be developed one day. But we still know there's such a large percentage of drugs that are manufactured overseas that this is definitely going to be a major hit to many companies.
Yeah, especially just generic manufacturers, they say that they operate on very thin profit margins. And they are warning that these tariffs might push them out of the U.S. market. You're talking about biotechs coming, the reshoring, but how real is the risk of accelerating drug shortages if this comes into effect?
This could impact the actual ability to be able to provide people with cost-affordable drugs. We know that many of the brand name drugs are oftentimes way outside of the price mark that many insurance companies will pay for. And so many times people are purchasing the generic drugs when they are needing it for various ailments, various illnesses. And we know that this will definitely put a challenge to that as well. Whether or not insurance companies will be able to pay for these brand name drugs or the fewer drugs that are going to be available here in the United States, I think that is still a question. Hopefully pharmaceutical companies are working with insurance companies on that, because the patients are going to be the ones that are going to really be feeling the impact of the tariffs. Unfortunately, we already know the drug prices here in the U.S. are some that many seniors, who are the largest consumer many of these pharmaceutical drugs, are experiencing, whether or not they're experiencing extreme bills from not being able to afford their drugs, oftentimes not able to have the appropriate drugs for many of their illnesses or ailments as they age. This could be a major health crisis here in the United States. But the president has said there's a year and a half, obviously, until this could potentially go into effect, and this will definitely require a combined effort between the administration and pharmaceutical companies and insurance companies as well.
Okay, but looking at what studies are showing, that even a 25% tariff could hike drug costs by up to $51 billion in 1 year. 200% is on the table. We already know that the government in the U.S. pays up to, say, 70% for drugs, so for the Americans, and with Medicaid policies that U.S. President Trump is planning to cut costs on healthcare, who ultimately pays here? You're talking about patients maybe not getting their drugs. Who are going to pay insurance, or is it going to be taxpayers here?
Well, we don't see yet that there are signs that taxpayers, as you just expressed and shared, the big, beautiful bill the president has been discussing, which does cut some out of the Medicaid, also provides tax cuts. And so the question is, will there be other taxes that will be put in place? We don't see any signs of that as of yet, that the tax will be passed on to the to individuals throughout the country that are paying their tax each and every year. So the question really is around what will be the area that will allow for the funds to be made up. And so the hope is that the biotechnical companies are able to produce enough drugs or be able to work through some sort of an agreement. We also know the president has put tariffs in place before. People have come to the table and he has reversed course on that. And so that's another possibility as well, that we could see a reversal in course. Biotechnical companies, though, just yesterday were in the green. They showed some positive signs in the stock market. And so they must know something that we could be seeing some brighter days, and that even though these tariffs are pending, there are some plans and strategies in place to be able to address it.
Okay, Maria, we hope that the biotech companies do achieve what they want to do, but they did say that it would take, some executives are saying, to take years to deliver on this, especially reshoring the U.S. to deliver drugs and possibly meet domestic need. Thank you so much, Maria Bird, our correspondent in Washington. It's always good to have your perspective. Thank you so much. So, Ini, just looking at what we're talking about here, healthcare, which is very significant in the country. You know that the U.S., there's really almost no healthcare. You pay out of pocket, to actually access healthcare in the U.S. compared to other countries where you have the government, actually have health insurance and things like that. And if you have 200% hit on you, bam. Let me just use that. Where do you go from there? How these generic drugs like aspirin and the rest of them, how do they pay for this right now, especially if they're produced in the U.S., which the government is looking for, reshoring. Every company should come back and produce in the U.S. So how is this going to pan out for the people who can't even afford healthcare, and especially for Africans? Let's bring it back to Africa, that we don't even produce these drugs, and we depend on these biotech out of the country.
I'm sure President Trump has, thought of all of that, and as Maria said, he has people, who will sit on the table with him and help him to picture all of that. But I guess we'll have more opportunities at 1 p.m. Thank you so much, Will. And just before we go, I know we're out of time, but I can't stop without telling you how the market ended yesterday. In case you missed the stock market reports with Will last night, the all-share index was up 0.30%. That's still positive, sustaining the new level it hit, which is the 121,000 level. And top trades there were GT Access and MTN Nigeria. So the usuals. But the market is still looking green, and still a good one for investors in it. And that's it on the program. Thank you so much for being a part of Business Morning. I'll be back in the afternoon with Will Ibong, and we'll take you around the world of business again at 1 p.m. I'm Ini John Mekwa. Go out there, make some money, and I'll talk to you later.